Why am I using this indicator in my day trading of stocks? Well, I'm not going to build drama. I'm not going to try to build up any suspense because it's behind me right now. But the indicator that I have started to use and I'm absolutely loving is the volume weighted average price, or more famously known as the VWAP. So why am I using the VWAP? I'll get to that in a little bit, but first a confession on my part, and this actually has a whole lot to do with trading in general because if you're newer, or maybe you're not, then if you're not new, you already know trading is very psychological, very emotional. But I got to just come clean and make a confession. I got way too stubborn in my ways. My ego got too big. And I've heard about the VWAP over and over again. In fact, maybe you're saying, Clay, I already know what this is, so I'm just watching this video because I want to know why you're going to use it, which I'll get to. But the point is, yeah, I've heard about it. No, I'm not using that. Nope. And I just got so stubborn when I should have just started using this indicator a long time ago. So you know what? Work on that, Clay. Don't be so stubborn. And as you as a trader, like I said, the little miniature lesson here, don't be stubborn. Are you being stubborn somewhere else in your trading? I don't know, who knows, maybe somewhere else in your life. But don't be stubborn because, like I said, I've been using it. I've been absolutely loving it. It is a great indicator to use. Now, maybe you have no idea what the VWAP is, so I want to go through a quick little lesson, but this is also going to explain why it actually works and why I am using it. So what is the volume weighted average price? Well, let's just first look at what an average is. So what we have here is a situation where we have the volume, right? So how many shares are traded? Traded what? Well, traded at a certain price, right? So in traditional, averages, if you have something that occurs at $10, and then you have something that occurs at $20, you would say, okay, there's been two purchases. Somebody bought at 10, somebody bought at 20. And the normal average would be, well, the average means that is $15, right? Because that's just right in the middle. That would be the normal average. Nothing complicated there, right? Think back. You got to add up 10 plus 20, then divide by 2, and you got 15. So that is the average. But what happens if I added in this detail here? What happens if I said that, well, actually, at 10, there were 100 shares. So the volume at $10 was somebody bought 100 shares. And then what if I told you, well, at $20 though, somebody bought 10,000 shares. Is the average price really $15? Now on the surface, yeah, it is $15. But when you add in volume and the kind of the quote unquote impact that it has, well, the impact is a lot more up here at 10,000 at $20. So in other words, the VWAP is going to be telling you, yeah, no, I don't really care about that $15 number. I care about something much closer to $20 because that's where the vast majority of the volume actually took place, which is quite brilliant, actually. That's fantastic. That makes a whole lot of sense. So why does this actually work, though? And where is all this coming from? What is it that people believe? And I'm not saying this is not how it doesn't work. I'm just saying that I'm sure there's more to it than just this. But like I said, from a broad standpoint, there's no doubt in my mind that this plays a role in, the big money commissions, Wall Street, institutional trading, all that. They're using this to help figure out and define one word. And that one word that is trying to be defined is good. Now, what do I mean by good? Well, if you are an institution, if you are some big firm, and you have a client that says, I want 500,000 shares of Facebook, of Apple, of Netflix, of insert any company you want. Well, that's what institutional traders are going to do. They're going to go and buy those 500 shares for their client. But their client wants what? What would you want when you buy anything? You want a good price. Duh. But that brings up the question, well, how though is good being defined? So yeah, you want a good price, but how do they define that? Well, that's the VWAP. And the way that works is, going back here, we have, actually I'm going to use yellow because if you start watching my live trade videos, you're going to see a little dotted yellow line. That is the VWAP. So you're going to have this. And that is just representing the VWAP. So what is defined as good or bad? Well, let's stop and think about this. What would be good if they came to that person and said, hey, guess what? The majority of the shares we bought were down here. Well, that's fantastic. Why? Well, because the volume weighted average price, the average price when you factor in volume was way up here. So, but Mr. Client, we were able to get you less than what the average person was buying. That's going to have a happy client, right? When you can go and say, I got you less. And that's also going to get the trader extra bonuses, and they're going to get you rewards and stuff like that because they were able to keep the client happy. When you keep the client happy, they give you more business, and that's just business 101. Now, the other part is, well, what happens if people are buying up there? How is the client going to be feeling in this situation? I mean, if you go to the client and say, yeah, you know, we got you the 500,000 shares, but it was actually, we paid more than what the average price out there was. Wait, you paid more? You paid more than what the average? That's not going to make the person happy. That's not good. But you don't know what good is unless you have some sort of standardized thing. And the standardized thing, again, goes to the VWAP. So how does this pertain to trading? Well, what is going to happen in theory? There's no such thing as a holy grail. So like I said, this is just in theory. This is what people believe. And I'll get to that in a second. But what happens as the price moves away from this area? Well, oh wow, it's below the VWAP. I can put a smile on my customer's face. So there is going to be buying. Why is there going to be buying? Again, it's going to make the customer happy. Now, I'm not trying to tell you intelligence, but what does buying do? Well, buying causes prices to rise, right? So eventually, what is going to occur? The price is going to rise back up to the VWAP. Now, the problem here is that if the price goes up above the VWAP, now what's happening? Well, the further and further it goes above VWAP, there's going to be less and less what? There's going to be less and less buying, right? Because, wait a second, I don't want to be buying up there for my client. I want a smiley face. I don't want them frowning and mad and sad. So they'll buy some, right? Because, if it's 500,000 shares, their end game is to try to keep it below here. But the further and further it gets above that area, there's not going to be as much buying pressure. So if there's not enough buying, what happens? Well, selling pressure is eventually just going to take it back down. And the price is going to return to the VWAP. So that is why prices below tend to rise back up. Prices above tend to rise back down because it's all a function of, if you think about that institutional trader who only cares about his Christmas bonus or his bonus in general or how good of a price he's getting. And think about that, how good of a price he's getting, how good of a price being defined as relative to the VWAP. Well, then of course, he's going to stop buying the further it gets up there, and selling will eventually bring it back down. But the further it goes below, yeah, he's going to start buying, which brings the price back up. And then to bring up some, terminology, this is why the VWAP, when the price is below it, tends to act as resistance. And this is why when the price is above the VWAP, it tends to act as support. Keyword being tends. This is not guaranteed. It's just a general philosophy. So why am I actually using this? Well, one word, belief. But more importantly, because like I said, I'm sure some of you, if you're still are like, Clay, the VWAP, what do you mean you're just now starting to use it? It's like, so everybody uses the VWAP. Everybody uses it for these reasons you just explained, you moron. Why are you now just using it? Because I told you, my ego got in the way. I got stubborn. That's why. But why am I loving it? Why should you be using the VWAP? I don't know if any of this stuff is true, but you know what? Enough people out there believe it to be true. And when you have enough belief, we have this wonderful thing in the world of trading known as a self-fulfilling prophecy. Whereas when prices rise and get near the VWAP, because something is supposed to be the case, everybody just does what is supposed to be the case, which therefore creates what's supposed to happen. So if there's stuff out there where people are just believing and just because of that belief alone, like I said, who even knows that this stuff is true? But when enough people believe it to be true, then it's going to work by definition, a self-fulfilling prophecy. So that's why I've started to use it, is because I put my stubbornness aside, yes, but why wouldn't I use it when so many people out there are using it and so many people believe in it? I'm not saying they shouldn't believe in it. I believe in it, but I just believe in it because a lot of other people believe in it and there's a self-fulfilling prophecy. I don't believe in it because I don't know the commission structure to the fine-grained details on Wall Street, and I don't care. I just want to know, what does the herd believe? What do the lemmings believe? What do the vast majority of people believe? And if most people believe that this has some sort of magical and mystical powers, then my question is, okay, how can I arrange that to benefit my trading? Which is the same way you should be thinking. And it all goes back to that self-fulfilling prophecy. So that is why I'm now using the VWAP, why I found it's great. It's amazing how many times where you'll have this sort of situation where you have the VWAP and then the price, is above, so it comes down, bounces, and then stays above it. And then when the price breaks below it, everybody freaks out, and then eventually it works there, and then it gets rejected, and it gets rejected. It is crazy. Pull up a chart, look at the VWAP, and see how many times the price almost perfectly bounces off that level. So yes, that is what the VWAP is. That is why I'm starting to use it, and this is how it all works. Let me know in the comment section though, how long have you been using the VWAP? Are you gonna at least give it a try? Some of you are probably like, I've been using it for like 10 years, Clay. Welcome to the party. Fair point, but I am curious. How long have you been using it? Or maybe this is the first time you've ever heard of it. Or if you just have any other questions on it in general, let me know in the comment section down below. And then also hit the like button if you enjoyed this. I will keep on making these sorts of videos if I know that people are interested. And the quickest way for you to show me that you are interested is just to click that like button. And then also just check out the channel. Hopefully you decide to ultimately subscribe. But yeah, I'm using the VWAP. I love me some self-fulfilling prophecies. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.